What's going on, everybody? How's everybody doing? Let me know if the audio is okay, and I'll make sure to get this thing moving. How's everybody doing? My man Daryl Buchanan. Good to see you, buddy. How you doing? Shambo, my man, what's going on? How y'all doing? Sean Salazar, what's going on? How are you doing? Good, Dan. Good to see you, Francisco. Good to see you guys. How's everybody's Sunday going? Awesome. Mr. Sharp, long time no see. Good to see you in here too. Guys, pleasure. It's been a long time. I hope you guys had a wonderful weekend. It's time to get back to work. These are some crazy markets that we're going into, and I've gotten just a million questions from my students on what to do when the market conditions change like this. How do you handle it? How do you handle the volatility? You know, things will feel a little bit more choppier, but there are ways to navigate all this stuff and make money. And so it's really, really important to have a good playbook so that you can capitalize on it. But one of the things to remember about markets is that, you know, in absence of news, markets tend to go higher. And once a year or so, there's always some type of news or event that puts the markets in a little bit of a turmoil and will increase the volatility. And that's what we're seeing now. And so there's just very specific things that you've got to do to handle it, but it's still a tradable market. You just got to be having the right toolbox of tricks. So let me tell you, so this market has been a little bit funky for a lot of people. And well, let me get my TC2000 up. But there are ways to capitalize. You know, let me get my charts up over here. Boom, 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 boom. Let me know if you guys can see everything okay. Let's see here. Why is hold on. Why is this thing white over here? Something. All right, hold on one second. TC2000 works a little bit funky sometimes. All right. There we go. Give me 1 second, guys. I'm just loading up some charts. Hey guys, will you let me know if you can see my TC2000? It shows up like on mine, it shows up like there's a white screen. Hey guys, just let me know real quick. Okay, white screen, gotcha. All right, hold on 1 sec. Let me, All right, let's see. Let me just log into the browser edition. TC2000 always works a little funky. I got you. Hold on. I'm turning it on. Relax. All right. There we go. All right. Let me know if that works. Boom. Good, good, good. All right. So if you look at the markets of the last year, what do you guys notice? The market itself has been in this just big, giant range, right? And so I talk to people all the time. They tell me the markets have been choppy. Why is that? Why is that? Well, in trading, just like in anything, right? A rising tide lifts all boats. And trading is the same exact way. That when the market itself doesn't have anything going, well, guess what? Your trades will mimic a lot of what's going on in the markets. And then the average trader will get chopped up just basically by the commissions and fees because the market's not going and the market's not there to bail them out. If you guys ever hear like the theory, stock pickers market, right? Well, that's kind of like what we've had this year. You know, we've had a stock pickers market essentially, in that the market itself is flat or slightly negative for the year, but there's select stocks that have been going up a lot, and then everything else is the same. And so if you're noticing that in your trading, part of that is the reason is that the market is in the range, okay? And so when the market has been in the range, really the play has always been when the market looks a little bit shady and the market comes to the bottom of its range, you know, and it gets oversold, that's when you start adding stocks and you can play to the upside. And so as the market swings back to highs where you think it's going to break out, you know, that's, you know, during those upswings, that's when your trades are going to work a lot better. But anytime the market gets to highs, you know, and all your charts look really good, that's when you have to take your foot off the pedal and let things shake out. And so that's been the market this whole year, is that, you know, anytime you get to the bottom of the range, you get some nice moves for a couple weeks, and then, you know, back to the bottom of the range you go. And so if you're not able to play within there, your results are just been choppy all year. And so we're used to, right, the year before, where the market really, besides this one dump here, just trended all year. It trended all year, and so that builds some bad habits. As the market was just, when the market is trending, you could throw just a bunch of stuff at the wall and you make money. Everybody makes money, you know, in a bull market. Things get really easy and your bad habits become enforced. You know, in a really, really big bull market, you know, you can chase stocks and you buy them high and they keep going higher. You get bailed out of your bad entries. You can average down on a stock that's a loser and you'll get bailed out often because the market just keeps going higher. But all of those things in a range bound market change, where if you buy something high, well, then you just get smoked out, right? And so like breakouts have been a lot more choppy this year for a very specific reason, is that, you know, anytime the market gets high and all the charts look like they're about to break out, the market comes back down and you just kind of get flushed out. And so a lot of people have said like, oh, the market's choppy or whatever. And that's like the typical code for, hey, I'm not making money. Anytime somebody says the market's choppy, what they mean is their trading is choppy, essentially, right? And so that's been the range of the market. And so you have to be able to play within it. This is like a swing trader's paradise, though. It's such an easy thing to swing trade when you get a range bound market, because anytime you get, you know, I use stochastics to measure overbought and oversold. And so, you know, one of the things you'll notice, like, right, anytime you get, you know, short-term oversold signals, the market ends up, you know, having some really, really nice runs for a, you know, a period of 5-6 days or whatever. And so, you know, I use something like that to actually, you know, add swing positions and things like that. And then when the market gets overbought or starts getting towards its resistance levels, you want to be selling out of it. Okay, you want to be selling out of it. But recently, with the news in Greece and things of that nature, things have changed, right? We've had this increase in volatility. And so we had a low volatility environment where we were just in a range. And then recently, things have changed, right? With the news in Greece and also the crash in China, we've added some risk to the table. And what we're experiencing is not any different than what you see in any other year. Once a year, usually there's always some type of event that will cause some risk in the market and for things to shake out. You know, we've seen it in the past. You can see here in October, we had a really kind of nasty flush for a couple weeks. And, you know, every year you'll kind of see these type of things. And so what we're experiencing is nothing new, but there's a specific playbook that you have to use when the markets change and you lose your low volatility environment and you go into a high volatility environment, because this is where a lot of money is to be made. But even worse, you can lose tons of money because you're trading a playbook that doesn't work, right? In a low volatility market, you can do certain things that you can't do in a high volatility market. So we're experiencing kind of that once a year phenomenon. And remember, this market, in absence of news, tends to grind higher. That's just how it's been. And so always remember, once the news starts to hit, okay, you have to change your playbook. A few things that I use the 50-day moving average as kind of my tell on the market. So when the 50-day moving average is starting to slope down and the market gets under the 50-day moving average, I know that the volatility in the market will increase and that the market itself has a lot more risk in it. And it's a simplistic way of looking at things. But that's what I like to do, is use really simple things to kind of keep me moving quickly. And so I use the 50-day moving average as kind of my tell on whether we're in a healthy market or an unhealthy market. And you'll typically see, right, these breaks under the 50-day moving average, typically you get a lot of volatility when those things happen. And then when you get back above, you know, things start to kind of grind out. And so it's an easy way to look at things, but that's my tell. So a few things that I do, you know, when I'm looking at the market, and one of the things to remember is I will use that as my easy-go-lucky kind of tell. And when I'm looking at the market, so hold on, why is this all white? Give me a second here. So a few things that I'll do during these times. Let me grab my slides over here. Screen 1, screen 2. What's with all the heavy breathing back there, buddy?
Good workout.
I'm sure it is.
Wouldn't quit at about 20% of the way through.
Of course, he's a quitter. I got it. All right, tell me if you can see the slides. You got it? It should say PR. All right, cool. I don't know why we've been using this program. It's a little bit tricky to use sometimes. Hold on, give me a second here. Load this sucker up. All right, cool. Good. For some reason, I just get a delayed response on this thing. All right, so during these periods, there's a few different things to really keep track of. So number one, these type of events, usually the volatility will just last 1 or 2 months and then things go back to normal. So some traders will just sit it out. Now, as real traders, right, you should have a toolbox to make money in every market. And so I personally don't like the idea of sitting out because I'm a trader, right? What am I going to do all day if I can't trade? So novice traders, stay out, make watch lists and wish lists and study. One of the cool things is when the market gets really oversold or the market starts to really get flushed, okay, you'll get some unique opportunities to really go out there and make some money. And so when I was white screen, motherfuckers. Hold on. I wonder why it's like that. All right, hold on. I got you. I understand. All right, I got you. All right, so if you're new, stay out of the market, right? Relax. You can go and make watch lists. So like there's things that will happen, like the Chinese market getting flushed and all these different things happening where you will get once a year opportunities to really get some good plays. I won't hold swings under the 50-day moving average unless the market gives me an oversold reading. And so I use stochastics, Bollinger Bands, and the T2108 indicator from Warden to nail my entries. And so like when I'm looking at, when I'm looking at the market on when to enter this thing, one of the things that I always do is I use those 3 things. And so if I'm going to enter some swing positions, I only do it when I get the really perfect moment where I'm going to have an edge, okay? And without an edge, there's just no point of entering. And so sit there, look at the market, and we call this a rubber band setup. And so what we do is if you're looking, right, one of the things that I always do is, I'll add in, so I don't use the stochastics. I won't use this stuff all the time, but in very specific markets, what I'll do is I'll have a look of something that I'm using. And so one of the things that I like to do is when the markets get crazy is I like to use Bollinger Bands. And that will tell me if the market is sufficiently stretched enough where I can try to go counter trend and play that snapback, okay? And so one of the things that you're looking at, so I'll use a combo of stochastics and Bollinger Bands. And one of the things you'll notice with this market is, when you're stuck in a range, when you get oversold, the market tends to have some really nice snapbacks. And so, I'll use something like stochastics along with support and resistance to start helping me time when I want to enter my swing positions. And till that moment happens, I actually won't do it. And so I look at oversold readings and I look at Bollinger Bands to tell me like when the market's going to get sufficiently stretched to get back in. And that's kind of what you'll see with like some of these things like the China markets and stuff like that, is like we've been playing these Chinese stocks to the long side the last few days. And the reason for it is very specific. in that we have a trade called a rubber band setup, right? And a rubber band setup is the only time that I go counter trend. The rubber band setup is the only time I go counter trend. And essentially, the deal on it is when you get the stochastics that are low enough, and if you can get a stock with a candle completely outside its Bollinger Band, you can see it's a very, very rare thing. That is a very, very high probability of being able to catch the snapback. And that's how I go and trade into a counter trend, get into a counter trend move in a really, really volatile environment. But you've got to wait for it. Like you've got to wait for it, because in a market that's flushing, oversold will just get more oversold, okay? You need a very specific combo to kind of get that added confirmation. And so I use that candle getting completely outside the Bollinger Band to tell me that it's stretched. And I also do the same thing like when I'm trying to short parabolic stocks and things of that nature. So I use a combo of this. And then one of the things that I'll use is, that I learned this from my mentor, Paul, is, I use this, Warden has a T2108 indicator. And this will tell you it's a measure of market breadth. So does anybody know what market breadth is? So market breadth is a measure of what's going on underneath the hood of the market. Underneath the hood of the market. And that's really, really important. Why? Because indices are just usually made up of the biggest companies, right? So like if you're like the NASDAQ, that's your tech index. Well, if Apple moves 10%, then the NASDAQ's going to be in the green no matter what. So it masks what's really going on underneath the hood of the market. And so I use this indicator by Warden to really tell me like when the market is getting really oversold. And what you'll start to see is, throughout, since I've been trading, is when the T2108 indicator, it just means percent stocks above its 40-day moving average. When it gets under 20, you get a very, very high probability of a vicious snapback and a potential bottom, in a market. And so one of the things that I've always used is this, and you can see like if you're looking at, if you go back like just years, like if you go back years, anything under 10. So what my mentor told me is like, you get a handful of opportunities every year to get that oversold. And so when you do, that's when you load up in your swing trades, you load up in your IRAs, 401ks, because you're catching the market as it's getting stretched. And so you can see throughout, these years, if you overlay this with the S&P, these will represent the times where you get these big, big snapbacks. And so that's something that I use in conjunction with just reading the S&P chart to measure when the market's getting so oversold that you've got to come back the other way. So just kind of a quick thing. And, if you don't have TC2000, you can use like free stock charts. It's free. And you will be able to, so like if you're going on freestockcharts.com, you can use this thing for free and you'll be able to get access to some of this stuff. So you can go in here and you'll get a reading and stuff like that, and that'll kind of give you a measure of market breadth. And so I don't use like typical market breadth indicators like advance versus declines and things of that nature. I like to use this type of market breadth. It gives me a clear reading of really what's going on. And then the other thing that I'm always watching for my boot camp students, you guys know this, one of the things that I always use when I'm trading is, we run scans for 4% breakouts, and that gives us an idea of how strong the market is. Because advance versus declines will just tell you if a stock's at 1% or 1 cent down 1 cent, you will have an advance or decline. And so what we're looking for is significant moves. So like any given day, like I want to know how many stocks made X type of move. And so I always track stocks that are making 4% breakouts to the upside and to the downside. How many stocks moved up 4% or more and down 4% or more? And that will tell me the underlying strength in the market. And when those ratios change, when you start getting a lot more 4% breakdowns versus 4% breakouts, that's when you'll start to see the market breadth shift. And that'll tell you when the market's actually a lot weaker under the hood than it needs be. Now, it's summertime, guys, right? It's summertime, and so there's a little bit of a caveat. When you get this type of news event, okay, like this Greece stuff and the China stuff, when this happens and it's summertime, you have the perfect storm of being able to overtrade and lose money, okay? So when you get this type of news and it's summertime, almost always, all the action is in the morning, the first hour, and then things just peter off. And so like for those of you guys in our chat room and stuff like that, what do you notice? I always trade the first couple hours all summer, and then I bail. I get the heck out of here because I know that once the market starts to, after it makes its initial push and we make our money, the rest of the day you're just going to flatline and you'll be forcing trades, and that's how you always give it back. I had one day, 2 times this summer I actually stayed past 12 o'clock my time, and both days, you know what happened to me? The worst thing that you can do as a trader, I gave back my profits and went negative. I gave back my profits and went negative. We did that on Wednesday. I was up $2,500 at the open, and 15 minutes later, I gave it all back. I was up in the first couple hours. I just gave it all back, and then boom, it starts you on a spin cycle. So one of my mentors, Dr. Menaker, Andrew Menaker, is a trading psychologist that worked with our bootcamp students for a period of time. He told me that when a trader gives back 25% of their P&L for the day, it will mentally to them feel like a loss, and it will put them on a spin cycle of despair that 90% of the time you will actually give back all your profits, all of them. And so that's what happens to me. So 25%, so if you're at $2,000, right, and you give back, say, $500, $600, what mentally are you thinking? Oh man, I gave back my money. I've got to keep trading to get back to where I was. So then you start forcing some trades and you give back a little bit more, and you give back a little bit more, and you give back a little bit more. And before you know it, you're in the red. You're in the red, and that starts you on that spin cycle where you go all the way. And that's what happened to me. I was up $2,500. I ended up losing $1,700. And I used to do that all the time. That was one of my norms as a newer trader. It doesn't happen as much to me now, maybe once a month or so. Nobody's perfect, but trading the mornings is really, really important. So like if you're looking, and like if you're looking at really any kind of, hold on here, let me show you some charts. So if you're looking like really any of these type of stocks that we love to trade, right? What do you notice? You make your big moves right at the open, and then you flatline. You make your big move at the open, and you flatline. You make your big move at the open, and you flatline. And there's just not as much action going on every day. And so everything we've done, like that open is where you get your move. And then after that, you're just kind of stuck around. And so, I've made sure to just trade the mornings. And there's 2 things that happen when you do that. 2 things that'll happen when you do that. And is, number one, you won't give back as many profits. Number two, you save a lot of money on commissions. Like somebody like me will spend $1,000 a week on commissions, so trading just a little bit, trading a lot less saves you a ton on commissions too. And so that will be really, really important for you guys, is to, just stay in the periods where the market is moving. But guess what? There are a few other things that you have to do when you have this extra volatility. Number one, you got to cut your position sizing, okay? So some of the mistakes that I've made of the last couple of weeks, that I had to change around is, when it was all happening, I was trading the same position sizes. So like I was trading stocks like, Kihu, right? So if any of you guys see like, there's stocks like Kihu and Wuba and some of these Chinese stocks, and I like to trade 1,000, 2,000 shares sometimes. But if you look at the volatility on them, guess what's happening? Like if you look at the volatility on a Wuba, like in a given day, you can't trade 1,000, 2,000 shares. So like my average risk on a trade is like say 400, 500 bucks, like what I'm willing to lose. And so when you get a stock that can move from $60 to $50 and then back to $60 all in one day, guess what? You can't really trade 1,000, 2,000 shares of this, right? The swings of it on just a penny by penny basis is crazy. The other thing that happens when the markets get volatile is the liquidity will dry up a little bit. And so it's not as easy to get in and out. There will be spreads on stocks where you might have a stock that usually has a tight spread. You'll have a 20, 30 cent spread on it when the market gets a little bit volatile as things are moving so fast. So that spread alone, if you have a 30-cent spread and your average risk is 500 shares, you can't have 1,000, 2,000 shares because you would hit your risk just from the spread. And so you have to reduce your position size. But it doesn't mean that you can't make as much money as you normally do, because the extra volatility will compensate for reducing the size. And so, if you're trading 1,000 shares, right? Trade 500 shares. That'll reduce your risk in half. So you're already cutting your risk in half when you're trading a volatile market. That's good, right? That's going to keep the drawdowns to a minimum. And remember that as traders, your job, okay, is to really stay out of periods where you have the potential for drawdowns. The potential for drawdowns, because one bad trade can beget another and beget another. And when the market is wild, it's not going to be as easy to fix, because things are going to be a lot more up and down. The market's going to fly and it's going to tank, all based on rumors, not charts, right? Rumors, headline risk, right? If somebody in Greece farts, next thing you know, the market drops 2%. Somebody in China burps, next thing you know, the market drops 2%. You're running on headline risk, not charts. And so whatever you can do to reduce your risk is huge. But the key to always trading is to stay out of periods where you will have negative growth, right? Drawdowns. And when you have a volatile market, you can lose money really easily one day. And one day will beget another, and it begets another. We have 200 traders in our fund. And one of the things I noticed from monitoring 200 people's trades, I go on the master account and look at their trades on Sunday, and I'm like, and one of the things that I noticed is that when a trader loses one day, okay, it often puts them in a cycle where they go the next day. But usually a 3-day period. So you got 3 days. 3 days causes a slump, okay? 3 days causes a slump. So if you lose 3 days in a row, the stats tell me you're going to lose the next 10. So you have to stay out of periods where you get that. And Blake over here, he's one of our my business partners and traders in the fund. Like, he'll tell you, that's how you blow up an account. Like, you have a day, you have a couple bad days where you have some decent sized losses, and it puts you on a spin cycle where your account is basically busted even before you actually busted. Blakey,
Yes, sir.
What's going on? Say hello to everybody. Guys, this is Blake Anderson. I never hire people. As you guys know, we have a family business. We make like one hire every 2 years. You know, we have 13 people that work for us. And Blake is our newest employee. So I'm really proud to add him to the team. He's a young trader. He took our boot camp in what, 2012?
Yep.
2012, he took our boot camp. He's trading in our click fund, and he's getting pretty good as a trader. But he's a dear friend of mine. He actually came with me and my family to Costa Rica in March for a couple weeks and hung out with us. And so when we had to expand our business, he was like the perfect person. As right, he already had a 2-week job interview. If you can go zip lining and surfing, you're A-okay in my book. And so give him a big welcome. When you guys see him in the chat room, give him a congrats and stuff. I mean, we're not a prestigious company or anything, but I'm like very, very selective when I bring people on. I only hire students or family because I like to watch people work. So I have like a notebook when I meet like really smart people or cool people or somebody that has a specific talent in something. I always take note of them. And so that, you know, at some point when I need something, I have a ready-made list of people that I can contact. So when I called Blake, I said, Blake, I need you to do this for me and come aboard. And he did. And so he's down here now, and he's living in the frat house, and he's living half in Nashville, half in the animal house for the time being. So it's pretty cool. I'm excited to watch him trade and also you know, work with us. He's going to be doing our sales. But Blake will tell you, so Blake's blowing up what, 2 accounts? Mm-hmm. So Blake's blown up 2 trading accounts, and how it happens, I know all his Blake style too. You're making $100, $200 every day. Market gets a little bit crazy. One day you lose $500, and that puts you on a spin cycle. And before you know it, you lose 3 days in a row. It's a slump, and it's very, very hard to come out of it. It's impossible sometimes, especially when you have a smaller account, because every dollar counts. And so your number one job during these type of markets is to stay out of the slump. The slump is what gets you. Once you're in that spin cycle, it's crazy. And then the other thing is you have to watch your account balance, right? And so I don't know, like Blake, what is it when people check out of their account? So like say you have a $5,000 account, right? Yeah. Usually like if you lose, say a couple thousand, even though like you still have most of your account and you can get it back, I feel like people mentally check out a little bit, and they're almost like, man, I just want to get back to green or even, and that weighs on them. And then like before you know it, it's out.
Yeah, it's a mental game at that point. Start gambling a little bit.
So it's around that 50% level, a little bit before that, I think, even, you know. And so everything you can do to stay out of the slump is huge. And so for some of you beginners in this type of market, a volatile market like this, just staying out of the game, it could be something that prolongs your career if you can't handle the swings. You know, if you can't handle the swings. So just kind of something to keep in mind of. So now, what do you do? All right, so what do? You have a market that's volatile, and the market's also been in range all year. It hasn't broken range yet. So your technical analysis for a lot of you guys is not going to work. Regular technical analysis is not going to work, because when the market's in a range, only when the market's in an upswing are you able to really make any money, right? Otherwise, you're just stuck in a range, and then your trades will also be choppy. See, technical analysis is just using charts. It's just using charts. And so without the thrust in the market, your charts don't necessarily have that edge. So like for a lot of you guys, if you've tried to break out in the last year, right? Sometimes they work, sometimes they don't. You've tried a flag pattern. Sometimes they work, sometimes they don't. Why? Well, the market is ranging, so you may or may not break out in some of your stocks. And so what we do, right, what we love to do is we like to find stocks with an edge, meaning, of course, we're into technical analysis, we're into charting, but we need to find an edge. And so what we do is we're always looking for stocks with some type of catalyst, right? Some type of catalyst, and we call it a PR earnings breakout. And that PR earnings breakout is the one type of trade, whether the market's choppy or the market's down, this trade can work irregardless of what's going on in the market. And that's huge. And so that's one of my go-to setups. One of the setups that I trade the most is the PR earnings breakout. And that's playing a stock with a PR or earnings, whether it's positive or negative, doesn't matter. Okay, positive or negative, it doesn't matter. But we play long or short. But those plays, they will have an order flow that's independent to what's going on in the market. So the market could be shit in the bed. There's all this stuff in Greece happening, whatever. But if you get a stock with a positive PR, a positive news release, a positive earnings, now you have a fundamental catalyst that goes along with your technical analysis on how you're going to enter, exit, and manage your trades. And now you've got the perfect storm of goodness that will allow you to make clean moves. And so in absence of charts actually working, when your breakouts are failing, all of that stuff, ask yourself, does this stock have a catalyst? Does this have an edge beyond just me drawing a bunch of squiggly lines on a chart? Okay, and if it does, that is the type of trade that you want to trade in a volatile market and a range bound market where you're just stuck in this endless range. And so PR earnings breakouts are very, very important to what we do. Let me show you a couple little slides over here. Boom, 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 boom. So one of my go-to setups is this. This is probably, I don't even know, a third of our setups that we trade every day to the long and short side. And so if you can master the breakout and pullback plays within this, that will give you that extra edge along with the technical analysis that you already know. Stocks with a near-term catalyst, such as earnings or PR, are the driver of a majority of the explosive moves in the stock market. Stocks coming off that catalyst will allow your technical setups to move cleaner and more explosive. It will remove the choppiness. Combining setups with technical analysis and this type of short-term catalyst can be an extremely powerful trade, both long and short. If you can find the ones that are a little bit lower in float, that's very, very important. So it's like if freaking IBM has a PR earnings breakout, it probably doesn't matter. It's an old school company. It's a huge float. What is float? The number of outstanding shares on the market, okay? I consider anything under 100 million shares low float. Netflix, Tesla, really any big runner you've seen over the last so many years, those are low float stocks. Just because a company's 20, 30 billion like Netflix doesn't mean that it's a high float stock. It's a low float stock, and that's going to give you the range that you need. Big floats mean no range. And if you get a positive PR earnings beat, and the stock is a newer company, it's recently IPO'd, you're talking about something that can really, really make some explosive moves. So how do we find these bad boys? I scan pre-market for gappers. I scan pre-market for gappers. One of the things that you can use is, I use trade ideas. You know, I've used trade ideas for a number of years. The good folks at Trade Ideas are friends of mine. I love their technology, but it is a little bit expensive for a lot of you folks. So you can use the stockmarketwatch.com, and it'll tell you stocks that are gapping pre-market, right? I'll check the volume. You want to see some volume coming in pre-market. The best ones where people fail on trading this type of trade, when I look through, when I look through all my students' trades, and we go and I go through the trades, one of the things that happens, the people that play the gapper plays, okay? The people that play the gapper plays, they choose the wrong ones. Your vehicle selection is key, okay? Vehicle selection is key. As traders, you have a moral imperative to be in the best stocks, the most explosive stocks. So you've got to check your daily charts for key levels of resistance. PR breakouts that break over levels of technical resistance have the most potential, okay? So remember that. PR breakouts that break over levels of technical resistance had the most potential. So just because a stock gaps, it has some volume, doesn't mean shit. It's got to have a hot daily chart. That's what you call aligning time frames. If you don't have a great chart on the daily to match what's happening, and then a great chart in the intraday, you do not have alignment. And so when you're missing one piece of the puzzle, well, guess what? Your puzzle is not going to work. It's not going to look right. So finding the ones with the best daily charts are very, very important. And then the float, okay? You can have, now, like if you're looking, if you're looking at stocks or whatever, stocks that have higher floats, they will move, okay? You just have to have an expectation. If you ever see a stock move 100% in a day, 200% in a day, hundreds of percent in a week or two, that's not going to be a high float stock. Think about, like, right, when was the last time you saw an IBM or Microsoft or GE double in a day? That's not the type of stock. That doesn't mean you can't play those type of stocks. You just have to have an expectations game, okay? An expectations game of a high float stock will move 1 or 2% a day. So if you have a nice pattern and it's working, it may take 10 days for it to move 5%, okay? Where a lower float stock, say in 10 days, if it's really acting explosively, right, it could double. And so that's where you just have to have the proper expectations of saying, hey, just because the stock's float is high doesn't mean I don't necessarily trade it, but just know that I'm not going to be able to get everything I need out of it. It's going to trade a little bit differently. If you guys ever see, right, the range on some of these big old timer stocks, what do you see? The range on Bank of America. See, this looks like it died, right? It looks like this huge flush. It's 60 cents, okay? It's nothing, right? It looks like this stock had this huge, huge trend right here. 50 cents, okay? 50 cents. And so that's what happens when you have a really high float stock versus, a lower float stock is going to be, you can move $10 and then back up the other way $10. That's a function of the float. Now, like, once again, this is a $7 billion company. It doesn't mean it's a small cap stock. It's just a measure of the float. And so the float is important to me. Now, for some of you guys, especially the ones that are really bad traders, guess what? Some of you guys are going to be awful traders. That's just how it goes. And part of what happens when people are just not hitting their goals as traders, they trade the stuff that doesn't match what they do or match the speed at which they can move. So there's nothing wrong with a high float stock. If you're a little bit slower, you like to analyze things a little bit more, and you're playing the low float stuff and you're always getting stopped out, you're always getting chopped out, you buy and sell and buy and sell, and like your entries are always off. And that happens a lot. Like, I talk to students all the time. It's like, man, I just get stopped out all the time. And I'm like, dude, it's because if you use a 5 or 10 cent stop loss on a stock that moves $10, you're basically 99.99% guaranteeing yourself to get stopped out. But I like to keep those type of tight stops. That's how I trade. Great. So for that type of person, trade a higher float stock, that has less range. You'll be able to have really tight stops, and you won't have the crazy volatility that makes you nervous. If some of you guys are trading and you get that like weird pit in your stomach where you're like, oh fuck, I'm nervous, probably trading that type of wild stock is not going to do you any good. Trade a grandpa stock, trade Bank of America, trade GE, right? It won't give you as much gas, and you'll feel more confident in your trade because it's going to move slower and steadier and just, right, grind its way up over hours. You know, that's really important. You know, one of the things that happens is everybody wants to trade like their mentor or who they see online, and it doesn't necessarily match what they're all about. You know, if you're a more analytical person, you like to think about your trades, you think and talk and act in a reserved manner, right? Where you actually think about stuff, then trading these wild west stocks that maybe I trade, that's not going to suit your personality. So you could trade a whole different type of stocks. You could trade stocks with maybe it doesn't have to be grandpa stocks. It could be 500 million share float stocks that move just a little bit more steady, and you may find your niche there. You know, the low float stocks are the wildest stocks. You know, we trade these stocks like AMBA. Right, that one day AMBA drops freaking $25, you know, out of the blue, and it's like, that's a lot of stress, right? And so just remember, you don't have to trade stuff like that. You can make money in any type of trading. You just got to find the one that fits your personality. That's going to be huge. So let's get back to these slides. Remember, if you miss that opening push, okay, a lot of times these stocks will break out in the afternoon and you'll get your secondary play. So that's really important. So, you know, when we're looking at this, you know, this type of trade, it's very easy. You know, this type of trade is very easy. We're looking for the hot daily charts. Right, we're looking for the hot daily chart. Stocks that break out. Stocks with a relatively low float. So like when I'm waking up in the morning, okay, when I'm waking up in the morning and I'm running for my gappers, you know, a stock gaps up, I'm looking at the overall chart first. You know, I don't just put a bunch of them on my list. That's no good, right? I'm looking for stocks that are breaking out. And then from there, it's about finding an intraday setup that fits. And so, you know, we trade flags and flat tops and so on and so forth. And so once you get that stock that gaps, you know, it's just about waiting for that perfect moment where your risk will be minimized. And so, right, we need some support and resistance and some levels to be built. We need some levels to be built, and that will allow us to get into the stock with the less risk. And so, you know, you see a stock like this, and after that big gap, you can see it just consolidates for a period of an hour or so. And when it comes out of this flag, that's when you're hitting it with the stop under support and then playing it back to the upside. So just very simple stuff. But this, like, it doesn't matter. So a stock that's doing something like this, whether the market's up or down, it's not going to matter. Whether the market's up or down, it will not matter. And so that's going to be key. Like, can you play it both ways? Now, guess what, guys? The stuff I'm showing you, it's going to look really simple, okay? But when you try to do it, it's not going to be simple. Why? It's a matter of repetitions, okay? See, I have hundreds of thousands of repetitions now under my belt. So I see it clearly, and I know what to do. For a lot of you guys, you're in the dozens of repetitions. Have you seen this chart and tried to act on it X amount of times? And so I'm going to explain it, and I'm going to make it look easy, but it's not. But the way to get it easy is to see it and study it so many times that it becomes second nature. You must train your eyes to see it, right? Because when your eyes are seeing something for the first time, they have to sit there and focus and unfocus, and you're looking around. But once you train your eyes to see it, it will start to recognize it quicker and quicker every time. And that's what makes it easier, okay? And so just remember that you're looking for the simplest patterns, the cleanest ones, the best dailies, and then it's all about aligning an intraday setup that fits it. So you see, like a stock like S-Fund, this $30 level is like such a huge level. See how I was just sitting there, right? And so your risk is so small over here. Your risk is so small over here. It's a buy and set your stop and then let it play out. Now the question is always, well, yeah, I just cherry picked this chart right out of freaking thousands of charts. Thousands of charts, right? Cherry picked this one because it's the easiest one to look at. That is true. But remember, as retail traders, guys, as retail traders, this is our advantage. As retail traders, our advantage is we only need one good trade to make our day. We only need one good trade to make our week. And so we have this unique ability that hedge funds, mutual funds, stockbrokers can't do. The ability to sit there and be opportunistic, to wait for that perfect moment, because one good trade makes our week. One good trade makes our day. And so, yeah, and any given day, that chart I showed you, there may not be dozens of them, of course, but you just got to find one. And that's the thing. If you're looking at charts for some of you guys and you cannot instantly figure out what you're going to do with it, if you can't tell in a split second, I have to have it, that's not the chart for you. If you got to squint your eyes and shift it around and you draw a bunch of junk on it, you draw it this way and you draw a line this way, trying to make it fit, it doesn't fit. 1 second is all you need, okay? Stocks and charts are like people, okay? If a stock looks messy, if it looks messy, if it's hard to read, if it's all over the place, okay? When you enter it, it is going to act and treat you the same way. It's going to act and treat you the same way. Same thing with a person, right? That person's all over the place, sloppy, hot mess. When you date them, how you think they're going to act? They're going to be a hot, sloppy mess, right? They're going to look the same way. You want clean, crisp. That's what's predictable. Stock looks and acts predictable when you're looking at it on the chart. Then when you buy it, it's going to treat you the same way. A stock is a hot, sloppy mess. When you buy it, it's going to treat you like shit. It's going to make you stressed out. It's going to be unpredictable. And then guess what? That's when the emotional and mental errors come in on trading. So trading is so much mental. A lot of times people get in the best stocks and then they make a mental error. You ever hear, I sold too quick. I set my stop loss too tight. I messed up the trade, the management. Oh, if I'd only hold it longer, I would have made money. Well, the ways you get stuck in that stuff is if you pick an ugly chart that's all over the place, that's going to act all over the place, it's going to act like that after you buy it. It's going to cause you some indigestion, and then you are more prone to make an emotional or mental error. You're more prone for it. And so that becomes huge. You pick a predictable chart, you yourself will act in a more predictable way. You pick a messy chart, you yourself will make emotional and mental errors too, because the stock is acting that way. And trading is so much mental. Almost all of you guys, like the guys that go through my Bootcamp program, right? The guys that go through my Bootcamp program, at the end of the day, they all know everything there is to know about charts. They know everything there is to know about charts. There's nothing about charts that my guys are not going to know, okay? But in the end, it's about, can you get your damn fingers to do what you know your brain knows you're supposed to do. And that's where trading becomes tricky. Trading becomes very, very tricky for that specific reason, because you know what you're going to do. You take my class or somebody else's class, Nate Michaud's class or Tim Sykes' class or whatever it might be. Guess what? You're going to know what to do for that. But you still got to get your fingers to do it. And I think that's a huge part. And so your stock selection is going to be key. You know, anybody that trades unpredictable charts that are messy and not clean, they're going to act that way, and boom, it's done for you. Let's take a look at some more charts. Right. Boom, 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 boom. Same type of deal. So notice, like, even with this market acting so crazy, what's a stock that's been hot? That every time it dips, it still goes, whether you're looking at intraday charts or anything. SGYP, right? This little sucker is like the stock that just won't die. Okay, so earnings PR, there's multiple plays you can do here. Obviously, there's the day trade setup. The day it gaps, right? We'll have these day trades, which we'll go over for a period of time. And usually you get 3 days. 3 days. The first 2 days are the easy ones. The first 2 days after a stock is a PR earnings breakout, the first 2 days, you can day trade this to the long side. It's pretty easy. By day 3, you might be getting stretched. I have a 3-day rule. After the morning, you know, you may flush back. And so, you know, you have to be careful on day 3. But the first 2 days are awesome. So that's like your day trade setups. Now there's a secondary setup, which is your swing trade setup, okay? Your swing trade setup. So when you're looking after stock, this is my favorite swing trading strategy. I learned this from Paul. It is my favorite swing trade strategy, is that I look for stock that had great earnings or some type of PR that has that gap up, right? And a big run. And then if it can consolidate on low volume, okay, and pull back, and it holds the bottom of the breakout bar, I will enter it on support and consolidation. And so I'll wait for my setup. And so a stock like this, so this is what I would do, like my IRA. Danny, you guys have like Roth IRAs and things of that nature. So after your day trade setup is over, you have a period of consolidation where you kind of leave the stock alone. But you always got to keep it on your watch list, okay? Your watch list management is so huge. Watch list management is so huge because you got to keep the stock on your watch list. And so, you know, making sure you're organized is huge. As it consolidates and it works off this original push, when your pattern starts to form and you get some supports that are made, now you've got your secondary swing entry. You want to get as close to the bottom of the pattern as possible, stop under, and now you've got your swing entry for a PR earnings breakout, but it's on the swing side. And then your first target would be the old high. And then once that hits, you sell half, and then you ride up the rest. And that's a very, very powerful swing strategy. So one of the things that I'll always do, okay, as you come through like earnings season and things of that nature, look for stocks that had that great PR or that earnings that has that gap up. And after that original 2 or 3 day push, wait for that consolidation. Wait for it to come back and consolidate or pull back to some level of support. And then Once it stabilizes and you get that level of support build, then you have a really low risk entry to get a secondary push. It is very rare, especially on earnings breakouts. It's very rare. Like if you get a NASDAQ stock, not some like, bullshit $1 or $2 biotech stock, but a real stock, a NASDAQ stock, okay? And it has this amazing earnings out, and it's like a cybersecurity company or whatever it may be, okay? It is very rare that you get that gap up and it consolidates and it holds that opening gap, that you don't get a secondary and thirdary breakout, if that's even a word, who knows? But is that a word, Blake?
Sure.
I think it might be thirdary, baby. So remember, wait for that consolidation. So those are the plays that you want to be in, right? Right now we have this crazy volatile market. You need stocks with an edge. You need stocks with an edge. And so you have your day trades, you have your swing trades. Both of those are going to be important. And guys, by the way, you can do them to the downside too. So it doesn't just have to be like, it doesn't just have to be, stocks that are just going to the upside. Stocks will have often a bad PR come out and it'll gap down. And guess what? There'll be plays that you do on the day trade basis that are the same way. So like we use a play called opening range breakout, which is essentially, when a stock originally gaps down and is due for a correction, right? At the open, you'll make a range. And so when you take out that range at the open, I only do it the first 30 minutes. When you take out that opening range, if you get a nice tight range at the open like this, right, you short on the bottom of this breakdown, and you'll get a very, very nice flush that will continue on for a while. And then the first pullback, later on during the day, you'll get a retracement that you'll be able to hit again for a flush later. But I think one of the mistakes also that people will always make is they don't realize that there's 3 periods to the trading day. And the setups that you trade are different. So you have opening setup. So like this is an opening setup. I wouldn't take this type of setup at the middle of the day, okay? Then there is middle of the day setups, which is middle of the day, you get retracements. You get retracements and consolidations. So at the open, you get your first move. Middle of the day, you get a retracement. And then end of the day, you choose a side. And so what often happens after stock flushes like this, people want to keep shorting it and shorting it and shorting it. But you just run out of the juice. That middle of the day is where you get the retracement or consolidation, and then end of the day after lunch, you'll pick a direction. So be very, very careful on the setups you use and the time of day you use them. That's going to be huge. So folks, that's the essence of how I navigate this market. So sum this up. What do? We trade less. We remember what's happening in the market. We're in a range, right? You're trading that range, okay? Use a series of overbought, oversold indicators along with support and resistance to time entries for swings. If you're a day trader, you're only trading regular technical analysis setups when the market is flowing to the top of the range. You're matching the market, okay? If you don't, your technical setups won't work unless you have a stock with a PR or earnings breakout or breakdown, and then you will get a stock with order flow that is independent to what's happening in the market, and that's huge, okay? Those type of stocks, you can trade however they need to be traded, regardless of what's happening in the market. So remember that. Those are your options. When the market's volatile, cut your positions. I will not add swing trades unless when the market's volatile and the market's under the 50-day moving average, I will not add swing positions unless I get a rubber band set up in the market or whatever I'm trying to trade. Meaning it's got to be oversold, break of the Bollinger Band. We can use our T2108 indicator from Warden, right? We'll use some combination of these things to tell us when the market's stretched. Then we can add swing positions. And remember to use your stop losses, because when the markets are flushing, sometimes when you get oversold, you can still get more oversold. And so you have to get out with the small loss and try it again. When you're counter trend trading, and this is a rule for counter trend trading, when you're counter trend trading, oftentimes it may take 1 or 2 entries before you nail the right one. So like if you're eyeballing something and you take a small loss on it, don't cross it off your list, because that's not how this type of trading works. That type of trading works only if you can take a few small losses to nail the big gain. And so you have to be okay with that. And if you're not, then you get out of it, okay? You got to get out of it. So for a lot of you guys have been asking, we've got boot camp class starting on July 4th. All right, we've got some July something, Tuesday, and boom, 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 boom. We have a special going. We do have payment plans. I know a lot of you guys are students. Guys, class is intense for some of you guys. So remember that if you think you're just going to come in and watch a couple hours of class and you're going to be a trader, this is not how it works, okay? Trading is a job. It's a profession. It cannot be learned in a span of a few hours or some weekend watching some recordings of something. You need a university-style setting. Think about how an Olympic athlete is trained or a doctor is trained. You have a very, very specific training that you need to go through. Then you have very, very specific ways that you measure things and your progress, your tactics, okay? Then you have to work on your mind, your body, your diet. Trading is the exact same way. Once you have your core knowledge, we've got to work on your brain, your mindset. But beyond that, we've got to go out and practice it. And so we have 1 month of live classes, 4 days a week at 8 p.m. Sunday, Tuesday, Wednesday, Thursday, okay? Class is going to go for about 2 hours. So you got to have some time. Everything will be recorded, okay? Everything's going to be recorded so you can come back to it. You have lifetime access to all these recordings, past boot camps, coming into new boot camps, because this is a lifelong profession that we're going to show you. From there, okay, you're going to watch me trade live. I literally have, when boot camp is going on, and for my students always, I have my trading platform up. Not just my charts. I just show you some charts and like, oh my God, look at my charts. I have my trading platform up. I have my students watch me trade live. Every single buy, sell. They see my P&L. They see my ups and they see my meltdowns. I don't have many meltdowns, but once a month I will have a mini meltdown where I give back some profits. I have something heinous. I do something heinous. The key to trading is you just got to be good 90% of the time. Okay, that's what's awesome. But that's the best way to learn, is to actually watch somebody do it live. Who's going to do that for you? Okay, guess what? You read a fucking book. What are you going to do with it? Oh my gosh, I got this book. All right, you got to go out and practice it. But even worse, you've got to see somebody do it live. Okay, you got to see somebody actually go out and make money. Right? How can you go out and make money if somebody else can't go do it, if you can't see it? And so that's huge. And so I trade in front of my students live all day, every day. By the way, I leave at noon. You know, we go to the beach and we go do some bro stuff. We're a bunch of young single men with too many toys and not enough time. So our summer times are playtime. But you will watch me do what I got to do in the morning. Okay? From there, this is the awesome part. We'll have, after you guys watch me trade, We'll do live market recaps, trade reviews, okay? After the market closes. We'll do that for 1 month, okay? So guess what's happening? At the end of the market, I'm going to have my P&L up. We're going to say, Canelo, this time I made $2,000, lost $2,000, whatever it might be. I win, I lose, we talk about it. We talk about it, and we go through the trades. Why did I take it? What did I do wrong? And guess what? Even days I make some money, I screw up on a lot of the trades. You can always do something better. There's always something more that you could have stuck to the playbook. So we talk about it. You know, we talk about it, we discuss it, the students ask questions, and it's awesome, right? And so that's huge. You'll have quizzes, assignments, and then you have access to the screen share to watch me trade. We have a chat room where you'll literally be seeing me goof around all day on this thing. I'm on video, and so you'll see me and the knuckleheads all back here singing and dancing all day, working. So it's pretty cool. I modeled this class after the way that I taught Mary Beth. You know, she helped me make this class. This was the exact stuff that I taught her. And then when we tried to mass produce this, I basically, because I'm not smart enough to make anything new, I just took all the stuff that I taught her and we turned it into a class, and here we go. And guess what, guys? This fucking boot camp is awesome. Everybody you see here, Mary Beth, Blake, Jordan, I have 13 employees. They all were my students at one time, except my 2 idiot best friends. They run the business, and that's a family thing. But they all were students. You know, that's, you know, so it's a family. It's a family. It's a community. We have a private Google community where the students interact with each other. Like Blake, before he was working with me, like his best friends are like Chris and a couple of other guys, and they're all from boot camp class. Like, you know, people hang out, they go and we do all sorts of weird shit, you know, like Blake's come on vacations with me before he ever worked there with me when he was just my student. And that's the cool part about it, is it's a family, and you'll see it. I have students come all the time. I have an open door policy. Anybody ever wants to come to Casa Canal, I got a bunk bed room up there with 4 bunkies. You're welcome to stay in them. The only rule is when you come to Florida, you got to stay in my house, and you got to be up when I'm up, and nobody goes to bed before I go to bed. So as long as you can do that, we're good to go. You come and stay as long as you want. I've had students come here and stay for weeks once you complete boot camp, of course, because it's worthless to you if you don't know what I'm talking about. I'm trading all day. So let me answer some questions. Guys, that's 2309. We take payment plans and all sorts of fun stuff. So, you know, anything you guys need, I will make sure to have, you know, get it for you guys. Let me answer some questions. Hey, Sean, I'll get you some Bulls swag. I got all sorts of stuff, man. You like my tees? It says, one team, one dream. That's our company motto. So teamwork is like the last undying competitive advantage. You know, people have leveraged technology. People have leveraged everything to get an edge. But one of the things I've noticed about business, to be a successful businessman, the ability to leverage your team is a very, very powerful thing. Groups of people that share a goal and actually are involved and feel involved and have a piece of it, they can do amazing, amazing things. I myself am not some type of genius. Obviously, you can see I'm a bald, hat-wearing, regular old Joe, but I got a sweet team, and so I get to do some cool shit. All right. Dun, 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 dun. Will you teach swing trading in class? Yes. So originally, I started off as a swing trader. I had a job many moons ago. It was an awesome job. I had to work. I didn't want to get fired. So I swung. I did swing trades every day. and I built up my account until I had enough money to quit my job. But I never really day traded while I was actually working. I was doing mostly swing trades. Alfred, how you doing? Yes, that's a great question and great answer, by the way. Alfred says, can't you just position size larger for smoother moves on high float stocks? 100%. 100% you can. You know, you just got to have the bankroll for it. You know, if you need 5,000 shares or 10,000 shares of General Electric, that's hundreds of thousands of dollars. That's really important. For those of you guys that don't know, Mary Beth just asked me, she says, why does it burn when I pee? And, you know, I'm going to have to, so you're going to need some medical help here.
What?
We'll put that one on. Well, that's because, so why she wrote that is when Mary Beth does webinars, to throw her off her game. When she was new, I was testing her. So when Mary Beth was new, I wanted to see how she would handle pressure, like how she would handle a bunch of people typing shit at her, sometimes hateful stuff. Could she keep her composure? And that was really important because, you know, I thought she might be my business partner someday, but, you know, I wanted to see if she could handle the heat. So I always type stuff from aliases. And one of the ones that she caught me on was, I wrote, why does it burn when I pee? But I actually kept it as myself. And so she actually started cracking up laughing during her webinar when she's teaching a class. And so now she has returned the favor. It's 5 years ago when I was just a young man in my 20s. So a couple of people mentioned, hey, I'm entering a slump. I'm down 3 days in a row. How do I break the slump? Slump busters. So guys, anybody know the best way to get out of a slump? A slump buster. If you were a single man and you were a slump, what would you do, Blake?
What's that?
If you were a single man and you were in a slump with the ladies, you know, dry spell, what would you do?
I mean, I would analyze what I'm doing wrong first.
That's wrong. So if you're a single man and you haven't get laid for a while, you need a slump buster.
Are you still teaching class?
Yeah.
Okay.
You need an easy one. You need like a layup. That's what you have. That's how you break the slump. But Blake is so handsome over here. He's probably never been in one. But people like me, my whole life is basically a slump with women. So you need a slump buster. Same thing in trading. You need a layup. Okay. So everybody, Justin, everybody has a setup that they're good at. Everybody. Even the worst traders have something they're good at, something positive. Okay. So rather than sitting around, farting around, sashaying around like a Turkish gypsy, when you wake up in the morning tomorrow, figure out what's your go-to setup. What's a setup that you actually understand? Like, I always get questions like, I'm not seeing the charts well, or I'm not seeing this or that, all that stuff. So they don't know what to do. Great. Guess what? If you don't know what to do, you stay out of that stuff. Wait till you find your setup. That's how you break the slump. You sit there on the sidelines and you only trade your go-to setups, your money makers that you know you win at, that you understand that there is no confusion on what you're supposed to do. You see it, you know what you're supposed to do, and then you do it. And if you don't find it, you sit on your hands. And guess what? When you do that, you may lose, okay? You wait for your slump buster trade, you may lose on one. But if you do that trade 5 times, and you only wait for that setup, your go-to setup, your money maker, your slump buster, you're gonna make some money. And once you make even a little bit of money, you are busted out of your slump. Mr. G, my contact email is canal@bullson.ws. Oh, Chris Zielinski, good question on how to handle gaps. Okay, so the market is a little bit goofy, all right? The market is a little bit goofy, but because you're getting overnight gaps. You get overnight gaps when the market gets volatile. So one of the things, Chris, I'll have a list over here, okay? I have my list. So pre-market, I'm organizing my list to like my top 3 or 4. So I have tiers. Tier 1s are stocks that from my scans and stuff of my homework that are ready right now, right there, that have not been busted, okay? That I can trade at this moment. I just need an intraday setup. Tier 2 is stocks that have good overall patterns, but they're going to need some work, because the gap or they just are too, something's going on. They need some work. And then I have tier 3 of stocks that I'm watching that are just in play that we trade all the time. And so I'm constantly just kind of dragging stuff and reorganizing to that point to see exactly what are the 3 or the 4 that are ready now. And those are my tier 1s. So tier 1s are stocks that I hammer. Tier 1s are stocks that I hammer. They're ready now. I'm probably going to take them at the open if I can. And so that's how I'm always going. The other thing is, if you get the markets that gap just incredibly, you may get a counter trend trade on it, because when the stock market itself is, under its major moving averages and they're all sloping down and you've broken some supports and you're no longer oversold either, if you get too big of a gap, you may fade back on a lot of stocks depending on their overall look of things. So like something like Yoku gapped 2 days in a row. We took this trade right at the open because, it gapped up again for like the 3rd day in a row. And so we went, counter trade on a lot of these bad boys because they're all hitting resistance. And so if you get the gap up, you may have to redo your charts a little bit, but even Cena, after such an intense drop, after a couple days, it just ran right back into resistance. And so after such a big gap, the only play that you can do is really short. And so, you've got to take the shorts. We took these on the green to reds. So, for you, that's a pretty simple setup. You've been doing this a while, Chrissy, right? You get the gap up, green, then you break under the base and you go red. And you're going back the other way based on the daily, and then also the frick that you've gapped up multiple days in a row. Hey, Inder Pradeep, my man. And Inder's question is, I have $25,000. How much can I make daily? Which broker? You can make 0 to negative, without proper training and skill level. You have no business probably using $25,000 to trade. I'd love to tell you that I'm going to help you make a lot of money. Doesn't work like that. This is trading is a job. It's a profession. It's no different than being a doctor, lawyer, anything. You got to put in the time. So like some of my best students, like Chris Zielinski, he owns Green Bar Trading. One of the smartest guys I know, way smarter than I am. Took him about a year. Took him, the class goes for a few months. Then you got to fuck around for a few months and figure out who you are as a trader. And then you got to spend a few months fine tuning that. Like, it's like you're a teenage boy discovering yourself again. It's going to take a few months after that to make the tweaks to who you are as a trader. And then you still need the repetitions and the screen times. And then from there, Mr. Singh, then you can say, okay, I'm ready to do this. And $25,000 is a good chunk of cash. You can, that's basically, for most of my career, I've always traded between a $40,000, $50,000 account, and I just use leverage. You don't really have, see, $25,000 account, you have access to 100,000 or more in buying power at that point. So really, if you're good, you can make thousands of dollars a day. But if you're not good, you're going to lose thousands of dollars a day. You know, it's more of a matter of skill of what you can make. Hey, Kyle, how you doing, bro? Kyle Adams. So from the start of boot camp on airs, how long until your students can trade live? It's about 90 days. Some of the guys will do it in 60 days. Some will do it in 1 month. Some will start trading after a few weeks of boot camp because they just have their own money and they're not going to trade in the fund. They have already a big bankroll. They're doctors, lawyers, so they're not going to sit there. And I have a rule of nobody trades live during boot camp, but a few people will always break it. Troublemakers. But on average, I would say between 60 and 90 days. I've had some students that simulate a long time. Blake, how long were you on the simulator?
Most recently, 6 months.
6 months. So some people will be on the simulator longer. It's a measure of also where you are in life and how much money you have too, right? Because like Blake is a young guy in his 20s. Like he can't just sit there and put 10, 15 grand into a trading account and just lose it right away to find his groove. Where like for me, I was already when I made the jump to being a trader, I had a great job. I was already making like 150 grand a year running this company. So I had money to lose. So it's like, you know, being on a simulator wasn't going to do me any good. So I was always trading live, and that's how I learned my lessons. But most of our students will have on the simulator for a little bit of time. And guess what? If you got to simulate for 6 months, but you're going to do this for 50 years, who cares, right? You got to think always the long-term view of things. You know, that's how we always try to do things. Hey, Steve, I don't use the T2108 indicator on a 5-minute chart. It's just for the daily. And I'm basically, I don't care if it's a 60, 70. I'm only looking for extremes. When it gets into the 80s and 90s, it means the market's like really, really stretched. And then when it gets into the 20s and 10s, it means the market's really stretched the other way. Hey, Dan, how you doing? Dan says, how much did you save before quitting and going full time? Not much. I just had my trading account basically. But I was already, I was making money every day trading while I was working for about a year. So I was making a couple $100 every day, if not more, a lot of days. So, you know, I was building in my trading account while I was working, and then I made the jump. And then I had a good sized trading account. So, you know, I was able to start taking some cash. Hey, Mr. Obey, man, Christopher Obey is going live in the Click Fund tomorrow. Congratulations, man. You've been working really hard, man. I appreciate all the work you're doing, sir. Hey, Victor, man, you come to my house, you can get a hat. If not, you know, I'll probably put them on the website someday. Hey, Fiker, how you doing? Good question. So Fiker's saying, you know, what is the percentage of students that are going to make money? So that's an impossible stat to really gather, and I'll tell you why. That in any given class, say I have 50 students, you know, 20 of them are kind of kicking tires. Like, hey, I got some money to spare. It's like buying a Groupon sometimes, you know, like you buy it and you're like, I just want to test it out. And they may come in and out of class for a long time. I had a student of mine tell me that, you know, the boot camp was like a gym membership. Like he knows he needs it, but he only uses it on holidays when he says, it's time for me to find my destiny. Then any given class, you have 10 or 20 students that are really motivated and really, really want to do it. And they go through their homework and their quizzes and so on and so forth. And so the success ratio of those students is going to be a lot higher than, you know, right, some tire kickers and stuff like that. But also I noticed that a person's ratio of success and whether they can pick this up is not necessarily a function of the teachings and stuff like that. That also be good. But people that, if you're in money troubles, it's going to be hard to pick this up because the stress of the money troubles comes over. If you have marriage troubles, children troubles, whatever is happening in your personal life will manifest in your trading. And so the people that do well are usually like well-centered people, confident people, but they have some, maybe a good stable job or something like that, or a job in general. They're not looking at this as the savior, right? They're looking at this as a long-term view, a profession, and that helps. But like if you're coming in and you're like, man, I'm just down on my luck, I'm gonna give this guy a few $1,000 bucks, I'm gonna learn how to trade and become a millionaire, that person very, very rarely, makes it. I've never seen it. I don't even know. I think it's really the other way. The better you have your personal life centered and fulfilled, the better your trading is going to be. Because in the end, like, I'll tell you this, in class, you're going to learn everything that you need to know about trading. There will be nothing that you need to know that you don't know. And you'll also have the support, you'll have all that stuff. You have my phone number. You have my phone number right now at 517-974-1480. You want to give me a call anytime? I won't even know if you're a student or not. I just assume everybody's a student. You call me anytime. But in the end, that stuff that's in your personal life will manifest in your trading. Somebody that's an anxious person becomes an anxious trader. Somebody that's habitually late as a person, that shows up in their trading. Somebody that has anger issues or whatever, that shows up in your trading. You become a revenge trader. And so those are the things that you have to work on if you really want to be successful at this. Marsha, of course, you can watch the, Marsha Henry, you watch the classes the next day. A lot of our students have jobs. We have a lot of nurses and night health care professionals that work odd hours. You can 100% drive or take the classes and watch the recordings. You can email me. We have a private community where you work with the students, and you will be able to ask questions. And of course, you can just always call me. Fight Crew, ask Blake. Blake, how many times have you driven the car?
It's gotta be 50, maybe.
And in the last 5 days, have I driven the car or do you drive the car?
I always drive the car.
He drives the car. So yes, you come to my house, you can drive the Porsche, you can drive the Range Rover, you can keep it for a few days. I never drive. I always have the students drive me around. I like, if I have time off, I'm getting drunk.
Speaking of.
Cassandra O'Lear, what do you think about feminism? I don't. If you don't want to shave your armpits or whatever it may mean, don't do it. I'm all for people just doing what they want to do. Hey, Mr. Eggman, I actually don't use a double stop order. So guys, Mr. Eggeman's asking a question like on stop losses. Do you use a double stop order, meaning like your stop loss is hit, you sell half, and then you sell half a little bit later? And I don't do that. And the reason why is I'm primarily a day trader and short-term swing trader. And my personal belief in my style of trading is that I believe every stock has a line in the sand. A line in the sand where it goes from valid, your setup is valid, to invalid, okay? And so for me, if it goes under my line in the sand, then I have to be completely out of the trade because my setup is invalid. Now, if I have too many shares because I thought something was gonna move right away and it took too long, I may sell out some of my shares early, even before it hits the line in the sand, just because my timing was off and I wasn't able to do it. And so I go back to a normal position, but that's the only time I would vary it. Hey, Adam, I use the 9 EMA and 5 minutes charts, but if you use 3 minutes, you could use it too. Hey, Dan, on opening range breakouts, if you're a 1 minute trader or a 3 minute trader, You can do the ORB on those time frames. Hey, Victor, the fund cannot be used to trade in any stock markets, just the U.S. My training's in the U.S. You know, if you were trading in the Hang Seng or something, I would not be able to properly monitor you. Hey, Mr. G, how you doing? I've actually been watching this Shaq. I've got on my list. I would not day trade this thing. It's not what you call it. Let me see here. Hold on. I wouldn't day trade Shaq probably because the volume sucks on it, but you're back to like a support level here at 50. That's pretty significant. So like if you start to see a stock like this start to round out here for a couple days and you're starting to hold this, that would be the spot where you try to bounce it. And then your first target probably be, you know, somewhere in the 62 to 70 range. So, you know, you get a lot of upside if you can hold. You'll need a fairly loose stop. So I'd use like a 30-minute chart. Once it starts around 50, you know, you probably need like a $2 stop loss on it. A lot of people don't like trading when they swing. They don't like those kind of loosey-goosey stop losses. But on a stock like Shaq with so much range, you have to do it. Kyle's question, guys, is do you get out of a swing trade if the breakout fails but it doesn't hit your stop loss? Yes. And the reason is if my setup, my reason to buy, if your reason to buy is no longer, why is this LaCroix so cold?
It's been in the fridge.
Well, I didn't know we had any left, thanks. So if your reason to buy a stock is invalid, if your reason to buy a stock, the setup has been invalidated, then you don't have your thesis. Your thesis was wrong, so I just cut my losses. Or if it's not even your stop loss, I just get out. Dave, I have bread and butter setups. You know, I have a whole host of setups that I use every day to make money. Mostly once you get into trading, day trading itself is mostly a mental state of mind. You have a few setups that you use, and then it's just about actually being able to do them. Who is it, if you could be with one celebrity, who would it be? Rachel McAdams. Well, Rachel McAdams of 10 years ago, she's probably pushing 40 these days. Not that there's anything wrong with it, but I mean, who doesn't like a little bit of The Notebook? Oh, and The Time Traveler's Wife. Now that's a magical movie.
Yes.
There's nothing better than The Time Traveler's Wife. First of all, the name itself is amazing, but Time Traveler's Wife is creepy and amazing at the same time. Like, this guy meets Rachel McAdams when she's like 3 years old, and he's like 40s, and he's time traveling, and he's like, wow, that's a hot 3-year-old. And then all of a sudden they have this like epic budding romance, and then she gets in another time traveling movie. One of her last movies with the geeky English guy, that was a time traveling movie, and her husband was a time traveler. She's really into time traveling movies. Hey, Mr. Smith. Mr. Smith saying, for those of you, you know, what's the best way to vet a mentor, approach him or her? The best way to really do it is just to have a conversation. Call them. Anybody that doesn't take your call, and first of all, listen, most mentors are gonna be really busy. So if they don't answer your call like the first day or something, you know, don't get your butt hurt. But a good person will call you back. Good person's gonna call you back, because that's not a mentor if you don't call somebody back. Now, like in our class, you know, we don't just talk about stocks, but you know, what we're trying to teach is a way to attack your day, a way to attack your life, a way to be a winner. You know, a lot of my students aren't going to be great traders, but I'm going to teach them some shit about business and about how to be you know, a successful, I think that's just going to be really huge. What's the mentality of a successful person? Can I pick some of that up? But the best way to vet a mentor is a call. If he picks up your call, he might be a pretty cool dude. You never know. Now, of course, if you call him and he doesn't have any students, of course, you're probably going to pick up your phone call. So, you know, there's a little context to it. And the other thing is, I wouldn't worry so much about profits and losses and stuff like that. It's like, is this person going to really be able to relay the information you need to be successful? Like, you know, are you going to be able to run ideas off of them? Does he answer your emails? You know, all that stuff. Or do you have a vibe with that person? Oh, Kyle, man, I fell asleep during this new season of True Detectives, the first episode. Is it good? Hey, thanks, Daniel. Appreciate it. Tell Mrs. Mina I said, what's up? Mr. Vasquez, good platform to start. Like if you're just looking to simulate, you can use Thinkorswim. If you're actually trading live money, it's going to be more a preference on your account size and what you're trying to do with the account. You know, like if you had a bigger account, you know, you may trade at a different place than if you had like a tiny account. Ben McDaniel, I don't have, my software does not have a scanner back tester, similar to Trade Ideas. Trade Ideas is a multi-million-dollar company that is basically doing the artificial intelligence of stocks. I'm just a simple country bumpkin. Well, I'm not from the country, nor am I Southern, but I'm a simple man. And so I don't have the ability to make, you know, that type of back testing. But the people at Trade Ideas are good friends of mine. I'm trying to add in what they do. They're trying to make me my own charting. Hopefully they'll be able to make me the charting platform that I've been asking for. They've been working on some stuff for me. So I hope that we'll be able to use some of their stuff. I'm sorry, I don't know the answer to the feminine question. I had to probably Google what it really even means. All right, who else got a question? What do you guys got for me? How many retakes of boot camp class do I have? Lifetime. Blake comes into class. He did boot camp 3 years ago. I have students that I took my very first boot camp, like guys like Tim Weinkraut. Tim Weinkraut is a Vegas trader, 6'6" on Twitter. A fantastic trader. He makes more money than I do trading. And when he gets bored, he comes into class, you know, and it's years later. So my students always, you know, we have an open door policy. As long as I can keep it going, I'll keep it going. Dun, 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 dun. What do you think of Nate Investors Live and Cameron Foose chat rooms? They're both awesome. Nate is actually a good friend of mine. He's a better trader than I am. Dude's the man. Like he's a great trader. He's got a cool chat room. Cameron Foose is like actually one of my best friends. He's my travel buddy. We're like the Bang Bros running around town. Both awesome, you know, both awesome chat rooms and stuff like that. I'd highly recommend either one of them. I mean, if I was not the man, I'd definitely go hang out in Investors Live's chat room and goof around with him and his boys. Those guys are pretty cool guys, and all nice guys too, to boot. Will Bootcamp give my settings? Yes. So Dan, my trade idea settings, my TCU 2000 settings. So we have in Bootcamp a module page, So like where all the recordings are, all the past boot camps are, special webinars, guest webinars, and then we have a section for scans, trading psychology, all of this stuff. And it's sweet. So I have all my scans in there. We have Google Documents with every single scan I've ever written in my life. Some of them don't even work anymore because I put just everyone I have. I've changed my trading a lot. My go-to stock list, my trade ideas, layouts, everything is in there so that you can mimic how I set up my stuff. It's pretty cool. Anything I have, guys, is yours. Bootcamp begins July 14th, so that would be Tuesday. Garrett, we start boot camp every other month. Maureen, we should have like maybe 50 people in class this time, 50, 60 people. That's usually about the norm. And then, we have students from the past boot camps come in and say hi and stuff and come in and take part of the class. And Maureen, don't ever worry about there be too many people class or not class, because our company, we're not a one-man show. There's me, of course, but Mary Beth is an instructor and a trader. Blake is a trader. He trades the mornings, then he hops on the calls. He's a trader, instructor, sales guy. Saeed, who runs the chat room with me, who's actually a way better trader than I am, sits in the chat room. He also grades people's trades. Paul, who is my mentor, who taught me everything I know about trading, works for me and is also a member of Bulls on Wall Street in the community. And so we have a whole team of people. And first of all, I'll always be the front man working with the students and stuff like that. I love it. But I have a whole team of people that you can reach out to, or you're going to be able to get help from. So I would never worry about how many people are in the class, because we have all these top-notch traders that work at the company. Hey, Tian, how you doing, man? I've missed you. Tian, you owe me an email. Tian is one of my students from Bootcamp 13. We're on Bootcamp 21, so a couple years ago. He's awesome. Hey, Dennis Verrett, man, I love you, man. I appreciate all the wonderful emails you send me. Tell your girlfriend I said hello. I hope the weather is treating you okay in Michigan. Hey, Blake, Marcia Henry says she's going to call you Tuesday, by Tuesday.
Looking forward to it.
Blake is a Southern gentleman of the utmost refinements. He's a man who wears golf shirts and plaid colors all day. Blake, do you have a Colonel Sanders suit?
Make one.
Man, I just picture you in a white suit with a pink flower, maybe a top hat, a gentleman. All right, anybody else get any questions? And guys, sorry, if you type a question in the chat, once it scrolls down so far, I can't scroll back up. That's what, if I missed anything, I really apologize. So if I missed something, just shoot it in. Oh, what do I think of RGSE? Turd. I mean, you got to look at the chart of RGSE to know it's a turd. But I mean, what did a buck or two? This stock blows. Solar stocks are super hard to trade anyways, but this stock in general, I mean, you're talking about a deep downtrend. It's going to be hard to time. Cassandra, man, that's a really racy question. So Cassandra wasn't even saying like, who's the one celebrity you'd want to meet? She says, who's the one celebrity you would want to be with? And I think when she means be, it's like she means be with. If you know what I mean, Blake.
Oh, of course.
Yeah, Mike, there's good volume coming in, but I mean, you're talking about just a gamble trade. The stock goes from $5 to $1. Yeah, you may get a bounce in it, but it's still it's a gamble. Find an awesome stock and an awesome trend that's pulled back to support, and you've got a much easier trade. All right, guys, what else you guys got? Nobody got any questions for me? What's up with that? Remember, got the Sunday blues. Okay, so the Mondays. I love Monday. Monday's the best day of the week for me. Why? That's our money-making days, right? Monday is where all the possibilities of life are right there for you. Rock and roll then, if that's all we got. I love you guys. I will see you all in class on Tuesday. For my students, I will see you all in the chat room tomorrow. We are going to kick some butt tomorrow trading. I'm ready to roll. Folks, I love you guys. Thank you for coming. I appreciate it. I am humbled by the fact that you goofies show up on a Sunday night. I will... Guys, if I miss any questions, just email me. Guys, this is my email. You know, sometimes I see them, sometimes I don't. That is my email. You guys hit me up anytime you need something. I will be there. Peace.